You'll own nothing and you'll be happy whilst renting everything you need from one company, whether you like it or not. This company owns $13.5 trillion in assets, more than almost every country globally. From airports to power companies, real estate to smartphones, even your retirement funds may be controlled by them. This company is BlackRock. How did one company, starting with 8 people in a single room, gain more power than most countries in just 37 years? Through convincing the entire world on a deceptively simple story, one they still tell today. Officially, BlackRock is just a neutral asset manager. They hold stocks and bonds on behalf of the clients. However, the contradiction is that they're the top shareholder in Apple, Amazon, Microsoft, Nvidia, and Google, and among the top 5 shareholders in around 70% of America's 2,000 largest companies. They say they're neutral. The numbers say they're able to cast massive influence on some of the world's most prominent companies. So, where did this power come from? A catastrophic crash out of all things. In 1986, a young Larry Fink, then a trader at a company called First Boston, lost $100 million in a single quarter. This failure changed him. It took over his thoughts and became an obsession. Never again would he make an investment decision without understanding every molecule of risk. Fink and 7 partners launched under Blackstone Group with a $5 million credit line. The pitch? Use computer modelling to price bonds that Wall Street was trading blind. By 1999, they'd taken the company public. The pattern was set. Buy competitors, build technology, and never stop. But $2.7 billion to $13.5 trillion, that isn't organic. So what did they buy? Everything they could get their hands on. In September 2008, the global financial system was melting down. Barclays, a UK bank, was desperate to offload its asset management arm, inclusive of its iShares exchange trade funds, or ETFs for short. In the midst of the panic, in June 2009, Larry Fink bought this asset management arm from Barclays for $13.5 billion. BlackRock's assets jumped from $1.4 trillion to around $3.3 trillion overnight, and some called it the deal of the decade. Today, iShares manages over $5 trillion. It's the backbone of their empire. Since then, BlackRock has steadily grown and scaled its power and infrastructure, and more recently, within the last 14 months, they spent around $28 billion on free acquisitions that changed everything. In October 2024, BlackRock bought Global Infrastructure Partners, or GIP, for $12.5 billion. This is a $170 billion infrastructure empire, including things like Gatwick Airport, Sydney Airport, Cirrus One data centres, rail networks, water systems, and massive amounts of renewable energy. They now own pieces of the physical infrastructure you touch every single day. Then, in March 2025, BlackRock paid $3.2 billion for Preqin, tracking 210,000 funds with 220,000 users globally. BlackRock now owns the data that tells investors where to put money, and they're one of the biggest places to put it. Imagine if Google owned Yelp, ran half the restaurants, then decided which places you saw in your search results. That's the level of control BlackRock has here. Monopoly level. And as recently as July 2025, BlackRock threw $12 billion at the acquisition of HPS Investment Partners, creating a $190 billion private credit machine. High fees, less transparency, and more control for BlackRock. These deals are estimated to increase their private market assets by some 40%, and the management fees they make by around 35%. But they're not done. As I record this, 2 deals are in negotiation. There's Deal 1, Aladdin Data Centers, worth an estimated $40 billion. This comprises 78 data centers across the USA. They're positioning themselves to own the infrastructure powering the AI revolution. Then there's Deal number 2, AES Corporation, thought to be worth roughly over a $40 billion total. This offers a powerhouse, generating tens of thousands of megawatts across 4 continents. BlackRock is buying the company that likely powers your home. If both close, they have control over airports, data centers, power grids, private credit, and the data telling everyone where to invest. This isn't asset management. This is infrastructure control. But how do they manage all this? What system connects it all? Through a single platform, Aladdin. No, not that Disney film from the 90s, but an actual piece of software. Asset, liability, and debt and derivative investment network in full. It's an incredibly sophisticated product that's been built over almost 40 years of development and that sits behind every decision BlackRock makes. Back in 2008, the US government requested BlackRock to manage hundreds of billions in toxic assets because Aladdin was the only system sophisticated enough to handle them. Maybe they were road testing BlackRock when the chips were down and they had to consider alternatives to help with the terrible economy at the time. Needless to say, BlackRock blast with flying colours. In March 2020, the New York Fed retained BlackRock Financial Markets Advisory as the investment manager for its new corporate bond facilities, PMCCF and SMCCF, which together had authorised capacity of up to $750 billion, underscoring BlackRock's deep operational role with public institutions. Not the government's own systems, but a private company. This showed the level of integration BlackRock had taken within major organisations by this stage. Over the same year, Aladdin managed $21.6 trillion, roughly 10% of all global stocks and bonds, running through one central software platform. But who exactly uses it? Well, an awful lot of major players. Deutsche Bank, Prudential, and CalPERS make up some of the larger entities using the platform, together managing hundreds of billions of dollars through Aladdin. As Bloomberg put it, BlackRock has become the fourth branch of government. In a hypothetical worst-case scenario, you have to ask yourself, what if Aladdin got hacked or malfunctioned? Well, with literally trillions flowing through the central system, a single notable disruption could cause a chain reaction. Mass market moves, forced sell-offs of positions, bankruptcies at individual investor levels, all because an algorithm sent a signal. And remember that Preqin acquisition? They're integrating data on some 210,000 private funds directly into Aladdin. More data, more control, more indispensable. But with this much power, what happens when it gets political? The situation explodes. Back in 2021, a conspiracy went viral that BlackRock was hoovering up as many single-family homes in America as the market would give them. BlackRock's response? To say that they are not among investors buying single-family homes. On paper, this is technically true, but BlackRock owned around 6.7% of American homes for rent, some 59,000 homes. The anger was directionally correct, but aimed at the wrong target. Then there's the ESG, or Environmental, Social and Governance controversy. Back in 2018, Larry Fink's CEO letter demanded corporations improve the environment and increase diversity, and to do so by promoting ethical investing into environmental, social and governance areas across the board. By 2021, BlackRock supported some 47% of environmental and social proposals. They'd become the face of stakeholder capitalism. However, some states revolted against these forced initiatives. Texas divested $8.5 billion. Mississippi sought penalties. Indiana dismissed BlackRock from $969 million. Come June 2023, the position had been abandoned, and in a U-turn, Fink said he'd stopped using ESG due to it having been weaponized. By 2024, BlackRock's support had collapsed from 47% to 4%. Inevitably, when January 2025 rolled around, BlackRock had exited net zero asset managers entirely. When the wind shifted, so did BlackRock. They are, after all, a business primarily. But the controversies don't stop there. In November 2024, 11 American states sued BlackRock, Vanguard and State Street. The allegation? That BlackRock had colluded with Vanguard and State Street, using holdings in coal companies to reduce industry output, thus driving up energy prices. The FTC and DOJ eventually responded, filing a statement back in the States. BlackRock tried to dismiss the case. The outcome? Access denied. The case proceeded. This was unprecedented. It was the first serious challenge to common ownership. But what is common ownership? Why is it such a threat? Because when everyone owns everyone, nobody competes. Here's how it works. You're CEO of United Airlines and you're deciding whether to cut prices or to steal customers from American Airlines. You look at your shareholder list. BlackRock, Vanguard, State Street. Then you research American Airlines shareholders, only to be met with BlackRock, Vanguard and State Street. If you cut prices and hurt American Airlines, well, your shareholders still own American, so they don't benefit. They just see less profit. The only solution is to charge higher prices across the board, which, when competition follows, results in the general public spending more money to get the same thing, and the service providers slowly losing custom over time too, due to the lower end of their customer base being priced out of the market. When competition is stifled, prices rise. Innovation slows. The economy grows slower. This pattern appeared in banking, tech, pharma, and telecom, every concentrated industry. 20 years ago, there wasn't much of a monopoly across America's largest companies. Now, BlackRock and Vanguard alone comprise the top 5 shareholders in around 70% of the largest companies in the USA. Let that sink in. So where does this lead? What's the endgame? Here's the future they're building, unless something stops them. BlackRock will complete those $80 billion worth of deals. This will theoretically give them control of electricity grids, AI data centers, airports, water systems, and the private credit financing businesses, all running through Aladdin. They will continue hiring former government officials, having taken on around 84 ex-personnel since 2004. This will be private governance, policy made by a CEO managing trillions of dollars, not elected officials. So, in answer to exactly how BlackRock gained this power, they built it one crisis at a time, and we let them. $13.5 trillion, more than every country except the US and China. BlackRock started as 8 people with a computer pricing bonds. 37 years later, they've built something unprecedented. A private company that owns pieces of nearly everything, manages hundreds of millions in retirement savings, operates software running around 10% of global finance, and is now buying the physical infrastructure of civilization. When one entity becomes this central, when failure becomes impossible because the system can't survive it, that entity stops being a company and starts becoming something else. Right now, BlackRock is creating a monstrous monopoly across a huge amount of global infrastructure. The question is, will anyone stop them? Or will we wake up 10 years from now where the same entity manages your retirement, votes your shares, owns your utilities, runs the data centers processing your information, and operates the algorithm deciding which companies deserve capital? The power and risks that come with it are all too real. What happens next depends on whether enough people realize it's happening and how they respond to this revelation. Thanks for watching. If you enjoyed this video, please like and subscribe. It helps others find our content and helps us grow and expand the channel. Turn on notifications so you're the first to know when our next documentary drops. We cover anything that reshapes wealth and influence, whether it's a single person or an entire continent. If you want more, click one of the videos on screen now. I'll see you in the next deep dive.